Attention Americans, Papa Powell and his boys decided mortgage rates are dropping, but don't pop the champagne just yet. With lower rates means lower monthly payments. It also means fiercer competition for your dream home. 5 million buyers are expected to enter the market for every 1% drop in interest rates. Prices will rise faster than ever, and bidding wars will become the new norm. But don't despair. With the right strategies, like buying now and refinancing later, plus a reliable guide by your side, you can beat the competition and land your dream home. Are you ready to unlock the doors to home ownership? So, the Federal Reserve is anticipated to start cutting interest rates in 2024, with market expectations pointing to multiple rate cuts throughout the year. The potential cuts are attributed to a slowing economy and rising unemployment, which could lead to lower inflation. Market pricing in futures contracts suggests a higher probability of rate reductions, with some experts predicting as many as 6 25 basis point rate cuts totaling 150 basis points. The rate cuts are expected to be gradual, and the effective federal funds rate is forecasted to be around 4% at the end of 2024. The exact timing and extent of rate cuts will depend on the evolving economic conditions. Vanguard's model, for instance, anticipates that the Fed won't be in a position to cut rates until the middle of 2024. So, will your dream home be more expensive or less? Well, U.S. home prices won't fall or go lower over the long term, that's for sure. But if rates drop, prices could jump 10 to 15%. Let's break down an example real quick to see how this would play out. Let's say you're looking at a home for $500,000 and you want to put 10% down, or $50,000. So your loan is $450,000 at 8% interest rates, the rates in November. That would mean your monthly payment would be $3,302. The home is now $575,000 and you still put 10% down, $57,500. This means you need an extra $7,500 cash up front for down payment, not to mention more for increased closing costs. Your loan is now $517,500 at 10% down. So yes, your monthly payment is now lower at $3,271 principal and interest payment a month. Yes, that might be less, but it's only saving you $31 a month or $372 a year. In other words, if you want to save $1 a day on your mortgage, you definitely should wait for rates to drop. But you're going to need an extra $7,500 cash up front to help you with the down payment at closing. It would take you 20 years to equal $7,500 at $31 a month. In other words, unless you have an extra stash of cash lying around that you can add on top of your down payment, there is no better time to buy a home than now. Plus, you can always call one of my preferred lenders once the rates do drop and discuss refinancing. Now look, I may be a realtor, but even the millionaires and the billionaires of the world will tell you the best time to buy is as soon as you can. Over time, in the long term, home prices have only gone up. So get in as soon as it's right for you, because it's only going to get harder. And that's based on history. If you want your buying, selling, or moving process to go on easy mode, be sure to call me, Nolan Grout, your licensed realtor in the state of Michigan. And while sure, I might not be worth $1 billion yet, I'm truly dedicated to helping you reach all of your goals in life, in real estate and beyond. If you like this video, let us know. Leave a like, comment any questions you have, and if you want us to go in more in depth, let us know in the comments. We'll be sure to make a part 2 and go more in depth on what happens when rates drop, how it's going to affect buyers, sellers, investors. Whatever you know, leave it down below and we'll answer it. Make sure you connect with me. All the links are below. Subscribe for more, and I'll see you guys next time. Peace.